Moving to thing number three, Gary, we're circling back to the Magnificent Seven. Thing number three on this week's edition of the Five Things, the Magnificent Seven's magnificent tumble.
Yeah,
Always making it tough on you.
I'm sorry, right? Magnificent Seven, right? We'll lock that down.
Whew.
So as we talked about last week, there's a group of 7 tech stocks that have led the market. These are mega cap stocks, and they did really well. The end of 22, all of last year, and the first half of this year, they've done really well. The last couple of weeks, those stocks have performed really poorly. In particular, the market leader, Nvidia, which is the company that has just rocketed the whole market, that stock in the 2 weeks closing last Thursday was down more than 15%. Same thing from Tesla. So we're seeing a variety of things here. Alphabet, or, as we know it, Google, they missed estimates for YouTube's advertising revenue. People were disappointed on that. That caused the stock price to fall. Tesla reported lower than expected earnings and a big decline in profits. A big part of that was a decline in registrations, particularly in California, which the company is in the process of exiting. Basically what we're seeing is these stocks are priced for perfection. They've just gone up an enormous amount. And so any results that they announce that are something less than perfect have been causing, 10, 15% declines. And when you have something like 25 or 30% of the market cap of your index tied up in 7 stocks and a couple of them report bad earnings, that will take down the whole market. And that's what we saw, again, last week. That was through Thursday. Some things started to come back on Friday.
I know, Gary, we have Nvidia earnings this week, I believe. What are you looking for in that earning report?
You know what? That's a great question. I haven't taken a look at the benchmarks of what people are looking for from the company, but basically, the reason that stock has been so highly valued is because the revenue growth they've had has been incredible, and their guidance, they keep raising it an enormous amount. Just a reminder, if you've got a company with a market cap of around $3 trillion, you need to beat earnings, right? You need to have huge revenue numbers. You need to take up guidance. So I think that's what the market's going to look for from Nvidia. And, the fact that the stock is down 15% before reporting earnings tells you people are concerned about that. I don't think there's anything wrong at Nvidia. I don't think there's anything wrong with the company, with their products at the company. I just think it's a case where there's a lot of excitement about results, and people are concerned that they may not make very high expectations. One company that's not part of the Magnificent Seven but had some really bad results was Verizon, another tech company, a communications company. They lost over 500,000 pay-as-you-go plans, and the reason for that is it was the ending of stimulus funds from the Affordable Connectivity Program, which was assisting certain households in paying for their cell phone bills, and that expired. And Rob, that's something we've talked a lot about on this channel and on this program, which is government stimulus is largely holding up the economy, and we're seeing just weaker and weaker results from the private market economy, the productive part of the economy. And so, where you see a government stimulus program ending and all of a sudden, 600,000 people are canceling their cell phone programs. And as a result, Verizon misses earnings and their stock gets hammered. This is the kind of stuff we're talking about. The government can't be funding everything all the time, despite the fact that they're trying to. So, these tech earnings actually came back around to something that's been a regular theme around here, which is public market spending pushing out private market investment.
With Nvidia, Gary, if we do see a big GPU count, which we're going to see big regardless, right? But if trends continue, it's going to be more and more. Is there anywhere you're looking that could be a part of that positive trend for GPU production?
Yeah, energy. That has been a huge part of this. And one of the things that's fascinated me is people are very excited about the future for AI. Okay, fair enough. I've seen it in action. I understand why people are excited. Um, it can do some really amazing things. And, the reason Nvidia ended up with a $3 trillion market cap before this, recent drawdown, is because people were buying tens and hundreds of thousands of these high-end GPUs. Well, here's the key thing. These GPUs use a multiple of the amount of energy and power that regular servers and data centers used just a few years ago. These are very energy intensive applications and hardware. And so, I read somewhere that the expectation for AI is it's going to take up somewhere in the neighborhood of 10 to 15% of our current power supply. Oh, Rob, we don't have that much spare capacity. And so we're going to need to start building out capacity. I don't think anybody is going to start approving large numbers of new coal plants or natural gas plants. To me, the obvious thing is nuclear. And so, my question to everyone is, do you own enough power generation and uranium in your portfolio? If you don't, deepknowledgeinvesting.com, click the subscription button. We are loaded up and prepared for this. So, there are multiple ways to play this AI situation, but I don't see how we can get this this next stage of information age benefit without building out a ton of capacity. And unless people want to start, building out more carbon related energy plants, it's going to be nuclear, and that means uranium. So, this is a place where we've done a lot of work. It's a place where we've been profitably invested for more than 2 years. If you want help on that, reach out. We're here for you.
Yeah, it's going to be interesting just with we're seeing a lot of it, right? With the AI piece, just the rate, the acceleration of that information, the amount of data that's being passed back and forth from a network perspective, right? Yeah, it's very interesting. And, I don't know what the whole CrowdStrike piece was, but that's obviously an interesting piece too, that when things do go wrong, so it has to be continued infrastructure that you have to invest in for where AI is taking the tech space. So interesting stuff, Gary.